Welcome back, everyone. Today's level for the S&P 500 is crucial because it sits right at the Hurst baseline of 7,384.2, marking a key equilibrium point in the market's cyclical structure. This is where the market decides whether to push higher or pull back. So paying attention here can give you an edge. As of June 27, 2026, the actual price is exactly at the baseline, closing at 7,384.2. This means the market is balanced between bullish and bearish forces. The aggregated projection, or the projected close, also aligns with this baseline today, signaling a moment of pause before the next move. Looking ahead, the Hurst cyclical projection shows a steady upward path over the next few weeks. By June 29th, the projected close rises to about 7,425, and by early July, it climbs further to around 7,550. This suggests a moderate but consistent bullish trend in the short term, with the market expected to test and potentially break above recent resistance levels. Support and resistance levels are well defined here. Immediate support sits near 7,358, while resistance is projected around 7,411 today. As the projection moves into July, resistance levels push higher, reaching up to the 7,600 zone, while support follows suit, maintaining a healthy buffer below price. Momentum turns are also noteworthy. The data shows recent momentum shifts with double smooth stochastic momentum turning up around early June, indicating renewed buying interest. However, there have been intermittent momentum turn downs. So traders should watch for these signals closely as they often precede short-term pullbacks or consolidations. Bottom setups have appeared recently, especially when the SPX closed below its lower Bollinger Band while the VIX closed above its upper band, signaling potential oversold conditions and buying opportunities. These setups occurred in early to mid-June, reinforcing the idea that dips may be good entry points in this cycle. Cycle contributions from various periodicities, 13-day, 28-day, 49-day, and longer cycles, show a composite positive influence, especially from the 28-day and 49-day cycles, which are currently contributing to upward pressure. The longer cycles, like the 198-day and 280-day, are neutral to slightly negative but not enough to outweigh the shorter-term bullish momentum. Seasonality is bullish in the short term, with aggregated seasonality indicators pointing upward through July. Volatility context remains moderate, with no extreme volatility reversal events currently flagged, suggesting a stable environment for projected upward move. So, what should traders watch next? Keep an eye on the key support at 7,358 and resistance near 7,411 today. A break above resistance could open the door to the mid-7,500s in the coming weeks, while a drop below support might signal a short-term pullback. Momentum indicators will be your early warning system for these moves. Looking further out, the midterm projection over the next 1 to 3 months points to a continued upward trend, with projected closes reaching the 7,700 to 7,750 range by September. This aligns with the broader bullish trend seen in weekly moving averages and momentum indicators. In the longer term, 3 to 6 months and beyond, the Hurst projection suggests the market could push even higher, potentially testing new highs above 7,800 if the current cyclical momentum holds. However, traders should remain vigilant for any signs of structural weakness, especially if price falls below key support levels around 7,300, which will be a warning sign to reassess the trend. In summary, the S&P 500 is at a pivotal level today, balanced on the Hurst baseline with a bullish short to midterm outlook. Watch the key support and resistance levels, monitor momentum turns, and be ready to act on confirmed breakouts or breakdowns. The cycles and seasonality support a steady climb higher, making this a practical time to consider long positions with disciplined risk management.